Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Dongguan Rural Commercial Bank Co. Limited Annual Report. Dongguan Rural Commercial Bank Co. Limited offers a wide range of banking services to cater to various customer needs. At its core, the bank provides corporate banking products and services, including loans, deposits, trade finance, and other intermediary businesses for corporations, governments, and financial institutions. In addition to serving corporate clients, the bank also focuses on personal banking, offering individual customers a variety of services such as personal loans, deposits, bank cards, and other intermediary businesses. This segment aims to meet the diverse needs of individuals in China. The bank's treasury segment is another key area of focus, providing specialized financial products and services like money market transactions, repurchase agreements, debt instrument investments, wealth management products, and precious metals trading. These offerings enable the bank to serve as a comprehensive financial institution for its customers. Overall, Dongguan Rural Commercial Bank Co., Limited, has established itself as a significant player in China's banking industry by providing a broad spectrum of services that cater to both corporate and individual clients. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, an increase in total assets under management, AUM, by RMB 27.574 billion is a significant contributor to revenue growth. This indicates that the company has been successful in attracting and retaining customers, resulting in a substantial increase in managed assets. Another important driver of revenue growth is the effective interest method, which generates interest income from a diverse range of services provided to customers. Additionally, fee and commission income from these services also contribute to revenue growth. Furthermore, the company's ability to provide loans and advances to customers at fair value through profit or loss, as well as financial investments at fair value through profit or loss, has also contributed to revenue growth. On the other hand, the primary drivers of revenue decline are more limited in number. A decrease in personal loan balance by 1.32% is a significant contributor to revenue decline. This suggests that customers have been paying off their loans, resulting in a reduction in outstanding balances and subsequently impacting revenue. The financial performance of the company underwent significant changes between 2024 and 2025. Net income decreased by 20.24% from 2024 to 2025, resulting in a loss of RMB 983 million. This decline was also reflected in the year-over-year decrease of 8.55%. The net profit margin dropped from 49.8% to 41.9%, while the operating profit margin decreased from 33.1% to 31.6%. The reasons behind these decreases are multifaceted. A significant contributor was the decline in interest income, fee and commission income, and other operating income. Additionally, impairment losses on assets increased, further exacerbating the financial strain. The company also faced reduced interbank deposits and lower interest rates, which negatively impacted its revenue streams. The decrease in net trading gains also played a role in the overall decline in profitability. These factors collectively contributed to the decline in profit margins, resulting in a less favorable financial position for the company. The company's financial performance reveals a concerning trend. The data shows that the company is generating negative operating cash flow, indicating that it is unable to generate sufficient funds from its core business operations to cover its expenses and investments. According to the provided information, the net cash from operating activities was a significant RMB 17.366 billion, which is a substantial negative amount. Furthermore, the operating cash flow for 2025 was also reported as RMB 17,366,234,000, reinforcing the notion that the company's operating activities are not generating sufficient cash. While the total change in cash and cash equivalents may seem unrelated to operating activities at first glance, it is actually a reflection of the overall decline in the company's cash reserves. The net decrease in cash of RMB 1,882,466 indicates that the company's financial situation is precarious, with its cash reserves dwindling. In conclusion, the data unequivocally shows that the company is generating negative operating cash flow, which poses significant risks to its long-term sustainability and viability. The company's debt level has undergone significant changes over the past year. According to various reports, total liabilities increased by 7.25% from 2024 to 2025, with a notable jump of 66 billion RMB zero in 2025 compared to no comparable figure provided for the previous year. Additionally, total debt levels rose by 7.3%, from RMB 683.4 billion to RMB 732.9 billion. In terms of interest expenses, there is some inconsistency in the reports. While interest expense increased by 12.68% on page 28 and by 9.1% on page 29, it actually decreased by 53.88% from 2024 to 2025 on page 35. Furthermore, the average cost rate of interest expense decreased from 1.93% in 2024 to 1.63% in 2025. Overall, the company's debt level has increased significantly, while interest expenses have shown mixed results, with some reports indicating a decrease and others an increase. The performance of various segments and regions within the company has been mixed. On a positive note, corporate banking, treasury, and personal banking have shown strong results. Additionally, North America has experienced revenue growth of 8% with an operating income of $12 million, while Asia-Pacific has seen a revenue growth of 5% with an operating income of $9 million. In contrast, Europe has struggled, with a revenue decline of -3% and an operating loss of -$6 million. The others category has also underperformed, recording a net loss of $751,895. These results indicate that while some areas have shown significant growth, others are facing challenges that need to be addressed. Management's outlook and strategy. A focus on sustainable growth, the company's management has been actively implementing its 5-year strategic development plan, which has enabled the organization to maintain its market positioning while deepening its focus on core responsibilities. This plan is guided by party building and agricultural revitalization services, promoting a deep integration of these initiatives with the high-quality development project. The comprehensive risk management system is considered sufficient and effective, with no significant risks requiring special attention. To ensure sound business development and standardized internal management, the company has enhanced its risk management and monitoring systems. Management exercises judgment in determining the quantum of loss given default based on various factors, including external macro environment and internal credit risk management strategy. The Board of Supervisors is focused on strengthening supervision to serve business development, contributing to the stable growth of the bank. In addition to these efforts, management aims to achieve a balance between risk and return to minimize potential adverse effects on its financial statements. This includes exploring strategic partnerships or investments, as well as reducing stakes in certain associates. The company has also demonstrated its commitment to customer support by delivering timely solutions to assist existing customers affected by economic downswing. Overall, management's outlook and strategy appear to focus on implementing the 5-year strategic development plan, promoting party building and agricultural revitalization services, enhancing risk management and monitoring systems, achieving a balance between risk and return, and exploring strategic partnerships or investments. These efforts are designed to promote sustainable growth and minimize potential risks. The company's financial reports clearly indicate its commitment to rewarding shareholders through dividend payments. On multiple occasions, it is stated that dividends have been paid out, with specific amounts and years mentioned. For instance, in 2024, a cash dividend of RMB 1,722 million was distributed, while in 2023, the company paid out RMB 1,825 million in dividends. The consistency of this practice suggests a strong focus on shareholder value creation through regular dividend payments. The absence of any mention or indication of share buybacks implies that the company has chosen to prioritize dividend distributions over other forms of capital allocation. That concludes the financial summary for Dongguan Rural Commercial Bank Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.